Markets off the day's highs as we near the close of 2022 with very modest returns, and they are still ahead of most global markets. Metals and utilities lead gains in the session while financials and FMCG lag.
Reliance Retail is set to acquire 51% stake in Lotus Chocolate for 74 crore rupees and make an open offer to its shareholders. The move is yet another step in Reliance Retail's portfolio expansion journey.
Eicher Motors picks up stake in Spain's EV bike maker Stark Future, while Craftsman Auto snaps up 76% stake in peer DR Axion for 375 crores, and Cipla strikes a strategic deal with Ethris, a leader in the mRNA vaccine delivery.
And India's second quarter current account deficit rises to a 9-year high of 4.4% of GDP on higher imports, but Q1 current account deficit has been revised lower to 2.8 and is currently at 2.2 rupees, unruffled as economists say the worst of CAD is over.
Well, hello and welcome to Business Lunch. It's the last Business Lunch show of 2022, and what a year it's been for the market. I'm Sonia Shenoy, with me is Pavitra. Pavitra, not too much happening in the market. Expectedly, I guess everyone's out and about, getting ready to party this weekend. But overall, it's not been a bad year in India for sure.
Oh, absolutely not. And we were talking about this earlier and, throughout the year as well, how we've been so resilient. So let's go across to Mangalam. He's going to recap the entire year gone by for us right now. Mangalam.
Well, they say bull markets actually cross, climb walls of worry, etc. This year, those walls were actually not just walls, they were mountains or fortresses, because what a year it was. You start the year with the Omicron virus, and then you have the Russia-Ukraine war. Thereafter, you have high inflation. You have global central banks, the US Fed, raising their interest rates. And then you see massive FII selling over 2.5 lakh crores in this year. European energy crisis. Through all of this, we stayed resilient. What was, the good thing for us? We had strong domestic demand. PLI schemes and China Plus One themes worked for us, and there were resilient domestic flows as well in the wake of the massive FII flows that we saw. So come all of that, where are we? We are sitting on the 7th straight year of gains for us, 2016, 2017, 2018, 2019. Then we had the COVID year 21-22 as well. Where are we? 5% gains on both the Nifty as well as the Sensex. And how does that compare with the world? We're still better off than most indices in the world. The only index that did better than India in the emerging market pack was the Turkish index, which has grown about 190 odd percent, but they had that level of inflation as well. 5% higher for India, which beat Brazil, Indonesia, Nikkei, and most of the developed markets as well, the likes of Dow Jones, S&P, as well as NASDAQ. In terms of dollars, we actually were underperformers, and that's primarily because the USD INR depreciated by about 11 odd percent, but that was understandable given the Fed rate hikes that we saw. In that as well, the rupee was rather resilient as compared to other currencies of the world. The FII selling that I spoke about, 2.75 lakh crore worth selling by the FIIs in this calendar year, whereas it was, matched penny to penny almost by the domestic institutional investors to the tune of 2.73 lakh crore rupees. 2.75 lakh crores actually is the highest FII outflow of the Indian markets in the history of the Indian equity markets itself. What were the sectors that did well in, 2022, we had the Nifty Bank, which outperformed with a gain of almost 21 odd percent. Broader market health was weak, with the mid-cap and the small-cap indices underperforming. And in the outperformers, we had the PSU Bank Index. This was the year of PSUs, with a 70% up move out there. Metals and FMCG also played their part. The underperformers here were the IT as well as the pharmaceutical pack. The IT index actually was down by 25%. A lot of individual stocks lower by much more. So let's drill it down to the individual stocks. The biggest Nifty performer was also its latest entrant, Adani Enterprises, up 125%. It was the year of ITC and Coal India, up 50% for both those index stocks. And M&M and Axis Bank as well put in a good gain of almost 50 odd percent. Among the losers, it was IT and Pharma all the way. IT stocks were the big underperformers. Wipro leading the pack with a cut of almost 45%. It was the year of PSUs, like I said, UCO Bank, Bank of Baroda, Union Bank, even PNB up almost 51 odd percent. It was also the year of defense names. So we had, big gains coming by on Mazagon Dock, Bharat Dynamics, Garden Reach and BEL. What was it not the year of? It was definitely not the year of a lot of these, diagnostic companies. So we saw big cuts in the likes of Metropolis, Dr. Lal's, as well as Thyrocare, because it was also the year where we came out of COVID. In the other mid-cap losers, we had a lot of these, new age listing companies which did not do well. So from the start of this year, we saw a cut off anywhere between 50 to 60% for Paytm. But let's end on a positive note and let's talk about some really big movers. Names like Crescenda Solutions, not something that we speak about very often, up 310%, Ugar Sugar up 240%, NDTV after the deal up 210%. Big gains coming in for Fact as well, 180% there.
Okay, thanks a lot for that. So that's the big moves that we've seen in 2022. But what's the outlook for 2023? Mahesh Nandurkar, India strategist at Jefferies, believes that the Indian market is unlikely to stage a runaway rally in the coming year, although interest rates peaking and the strength in the US dollar could be positive triggers for the market. Listen in.
To a large extent, one of the biggest worries of CY22 has played out, which is that of rising interest rates globally as well as in India. And while we can argue about whether the Fed, ends at 5% or 5.25 or 5.5, but we are essentially talking about 25, 50 basis points here and there. Large bulk of the rate hikes, I would say 80% of the rate hikes in the current cycle are now behind us. We are not likely to see, runaway returns, but so was the case in the last 12 months as well. And I would say maybe, what you mentioned, looks right that, maybe over the next 12 months or so, the fixed income and the equities will probably give similar kind of returns on an overall basis. All the global markets, including the developed markets, have corrected. Even the S&P for the year, I think, if not mistaken, is down about 12-13%. From the peak, it's down even more. And India has withstood quite well. Now, going into CY23, I think we have to obviously keep in mind the global backdrop as well. I think there are two things that I want to point out from a global standpoint, which should be positive for Indian markets in general. One, we are looking at, as I mentioned, the rates, the US dollar rates, Fed rate peaking out sometime in 1Q, CY23, and which basically should mean that the US dollar strength should also peak out. In fact, we've already seen the DXY has corrected by about 8-9%.
All right, that is the word from Mahesh Nandurkar on how the markets could really move in 2023. But let's also bring you some important corporate comments and talk about the banking space as well. 2022, like we were just telling you, has been a stellar year for Indian banks. We saw solid loan growth as well as an improvement in asset quality across the board. But what could 2023 look like, not only for SBI, but for the sector as a whole? SBI Chairman Dinesh Khara says that while loan growth could moderate a tad, books of banks will continue to improve all through the next year. Listen in.
What we have witnessed in the current year in terms of the improvement in the quality of the bank books, I expect that the same trend should be continued in the coming year too. The reasons are very clear because the kind of growth which we have seen is essentially riding on the growth of the economy which we have registered. When the rest of the globe is looking quite dull, perhaps India is a shining star. I think my expectation is last quarter, of course, we saw a very healthy loan growth, which is to the extent of over 20-21%. But going forward, it will probably taper down a bit. But I still expect that 15 to 17% is something which should be a reality.
All right, let's slip into a short break on that note. The government directs Marion Biotech to stop all manufacturing activities after 18 Uzbek children lost their lives after consuming its cough syrup. More on this after a break.
Hey guys, welcome back. You're still tuned into Business Lunch. Now, as global manufacturers look to diversify supply chains away from China, sources are telling us that the government is concerned about countries like Vietnam benefiting from the China Plus One factor, and they're looking to recalibrate its approach to allow Chinese investments and joint ventures in India in order to boost the manufacturing sector. So Parikshit is here to tell us more about this. Parikshit?
Yes, we have been learning over the past few months that the government is concerned about countries like Vietnam benefiting from the China Plus One strategy and is now mulling a calibration. The centre is reviewing its stance on Chinese investments to ensure global companies relocate to India. Many global manufacturers want to make in India but want to continue joint ventures with existing Chinese partners. Sources say Apple is keen on making iPads in India but wants China's BYD, Apple's main iPad assembler, to be allowed to ink a joint venture with an Indian entity. government may consider allowing BYD to ink a JV with an Indian company. Investments and joint ventures with Chinese companies have seen a slowdown since India imposed restrictions in April 2020. We're learning that the government may consider allowing Chinese investments and joint ventures for intermediate stage products where India does not currently have technological expertise. Recently, 13 to 14 joint ventures with Chinese companies were considered for mobile phone and electronics manufacturing. This comes in the backdrop of Vietnam emerging as a top alternative to China in high-tech electronics manufacturing. Vietnam is already Apple's sixth biggest supplier after China, Japan, US, Taiwan and South Korea. Google, for one, is considering shifting production of Pixel 7 phone from China to Vietnam. Samsung recently said it will be investing $3.3 billion in semiconductor manufacturing in Vietnam. Looking at recent trends, India does not want to lose out on companies seeking alternative manufacturing destinations.
All right, Parikshit, thanks a lot for that. Well, let's shift focus now to some more important news. Sources say that the government has directed pharma company Marion Biotech to stop all manufacturing activities after 18 Uzbek children died after consuming cough syrup made by the company. Abhimanyu joins in with more details on all of that. Abhimanyu, over to you.
Well, a show cause notice is likely to be issued to Marion Biotech today, and the company, in all likelihood, will get a time of 10 to 15 days to file a reply to that. The various drug control authorities from the centre as well as state were conducting their probe earlier. Samples had been collected on the 27th of December, and the production has been stopped till the time the reports and the results of the samples come out, not just in the public domain, but also before the regulatory authorities. Also, the records were not produced by Marion Biotech. The drug regulators have sought details of all the documents. The second round of inspection of the company had happened till late last night, and the drug regulatory authorities from the centre and states had found various deviations from the rules and regulations in manufacturing practices. It needs to be reminded that the Uzbek government had earlier suspended all sale of the said cough syrup, which had allegedly led to the death of 18 children in the Central Asian country. It remains to be seen what is going to be the result of the collected samples, since the Uzbek government has claimed that a high presence of ethylene glycol, which is a poisonous compound, led to these deaths, whereas the company till now has not specifically commented on the semantics of the allegation which was put forth by the Uzbek government. So clearly all eyes will be now on the result of the probe, and more importantly the samples and what the composition turns out to be.
All right, Abhimanyu, thanks a lot for getting us all of the details on this. Of course, we're going to keep coming back to you for any other updates that you pick up in the days to come. But moving on now, 2022 has been a game changer for the mobile phone market in India, with Apple betting big on India. So why is the smartphone behemoth eyeing the Indian market, and how could this impact the company's exports? Let's take a look.
The shortest flight from Cupertino in California to Chennai takes about 24 hours and 20 minutes. But despite the long haul, many Apple executives are likely to want to take this flight, with industrial hubs outside of Chennai and Bangalore increasingly playing host to manufacturing iPhones. But before we look at the Apple story in particular, let's look at the broader smartphone manufacturing story here in India. Now, the PLI scheme for mobile phones was amongst the first PLI schemes to be approved and notified by the Indian government. It provided for incentives worth 4 to 6% on incremental sales, and the budget outlay for the incentives was sizable at almost 39,000 crore rupees. Now, the results were quite dramatic. India is now the world's second largest mobile phone manufacturer. The government even estimates that mobile phone production is likely to grow from $30 billion in FY21 to over $130 billion by FY26. In fact, April to June period of 2022 alone saw production of 1.67 lakh crore rupees of phones, which includes exports of over 65,000 crore rupees. Now, a lot of these are very large numbers that we're discussing. However, they are attributable in large part to changes in the supply chain of one single company, that's Cupertino, California-based Apple. Since 2017, Apple has asked 3 Taiwanese contract manufacturers to move to India. That includes Wistron, Foxconn, and Pegatron. But why is Apple now looking at India to begin with? Well, there seems to be a growing realization by Tim Cook and company that there's heavy dependence on one single geography, and that's China. Recent disturbances in production, courtesy of the zero-COVID policy and the geopolitical tensions, have only strengthened this view. Apple, meanwhile, is increasingly seeking to diversify its manufacturing base to de-risk the supply chain and to make it more resilient. Here, India has been a strong performer. Incentives under PLI have strengthened India's hand. Moreover, the robust production in India, despite 2 waves of COVID, has impressed the iPhone maker. Moreover, Apple is likely to sell over 7 million units in India alone in 2022. But as 2022 draws to a close, these figures are only set to grow from here. FY21, meanwhile, saw exports of 11,000 crore rupees, that's iPhone exports, but April to December period for 2022 alone is likely to see exports of 20,000 crore rupees. Now, looking ahead at 2023 and beyond, Apple is likely to triple its production in India in the next 3 years. In fact, a JP Morgan report estimates that by the end of 2022, Apple would have shifted 5% of iPhone 14 manufacturing to India. As per this report, in fact, Apple will continue to move supply chains to India, and by 2025, 25% of all Apple products will carry the Made in India badge. Now, these estimates are being backed by Taiwan-based contract manufacturers increasing their exposure to India. Take Foxconn, for example. It has already committed an additional $500 million for expanding production in India. It has also planned to increase its manufacturing, in fact, by increasing the manpower by 4 times to meet the production needs. So what does this mean? Well, to begin with, expect Apple to nudge its contract manufacturers to expand the current facilities and to scale up production. Also expect the contract manufacturers to rope in skilled labor to align with the production cycle of Apple's requirements. And finally, the large engineering pool that India boasts of may also see design, innovation and R&D functions move to India. But industry watchers do raise a few concerns. Here's number 1. The heavy dependence on China is likely to continue for the foreseeable future, as India still does not manufacture several key components. Second, the value addition that is done in China for smartphones is generally low. In fact, currently it is limited to only about 14%. Number 3, Apple has 120 suppliers for its products. From them, only 12 currently manufacture in the country. And lastly, the timeline for releasing incentives to manufacturing is in fact running behind the curve. So far, only about 460 crore rupees of incentives have been released, with the likes of Samsung still awaiting clarity on their dues. So clearly, Apple for now is betting big on India, but with stiff competition from countries like Vietnam, India will have to stay on its toes to tango with Apple.
All right. Thanks a lot, Ashmit, for that. Pretty impressive, jumping in and out of the cell phone over there. But let's take a quick break on that note. On the other side, more news, more market updates coming up on the last trading session of 2022. Stay with us. Welcome back. In some cheerful news, Anant Ambani, the youngest son of Mukesh and Neeta Ambani, got engaged to Radhika Merchant yesterday. The ceremony took place at the Srinathji Temple in Nathdwara, Rajasthan. Remember, Anant serves on the board of Geo Platforms and Retail Ventures, while Radhika serves as a director on the board of Encore Healthcare.
Okay, and some unfortunate news also coming in. Indian cricketer Rishabh Pant had a narrow escape after a car that he was driving rammed into a divider and caught fire in Roorkee in Uttarakhand this morning. The 25-year-old wicketkeeper batsman, who was travelling from New Delhi to his hometown in Roorkee, had to break out of one of the car's windows in order to escape the burning car. He has also suffered burn injuries, but luckily he's out of danger now and is being treated at a nearby hospital.
Okay, hope he recovers soon. And in some somber news, legendary Brazilian footballer Pelé passed away last night at the age of 82. The 3-time World Cup winner was suffering from cancer and was receiving end-of-life treatment in the hospital. Pelé is the only person to have won the Football World Cup 3 times and is also the joint highest top-scoring footballer in World Cup history. As tributes pour in for the legendary footballer, the iconic Wembley Stadium in London was lit up in Brazilian colours, and the Brazilian government has also declared a three days of national mourning in the country.
Right, truly unfortunate news coming in there, but he's lived a good, beautiful life and, you know, something that has served as inspiration to all of us. But some more solemn news also coming in today. Prime Minister Narendra Modi's mother, Hiraben Modi, has passed away at the age of 100. Condolences poured in from across political parties following the news. The final rites were completed by noon today in Gandhinagar, after which the Prime Minister resumed his scheduled duties.
All right, with that, it is curtains down on this edition of Business Lunch. Thanks a lot for watching.